Hello, family. Welcome back to the channel. It's your boy E, the Dividend Passport Bro, coming to you all the way from the Dominican Republic, Santo Domingo. I'm here chilling, having a great time with my friend. And guys, today the market is closed, but that don't keep us from making content because every day we want to reach new people to get them to invest into their future and build generational wealth for them and their family. So, guys, as always, this is not financial advice. Okay, guys, to the newcomers, right? You're in the right place because all we do here is talk about money on how to make money. So, if you trying to make some money and retire early, you are definitely in the right place. Okay, and as always, this is not financial advice. Okay, I'm just a 52-year-old guy. Yes, I am 52-year-old guy talking about my portfolio and my portfolio alone. So, if you want to learn how to invest in the market and do it the smart way, stress-free way, follow along, take out your pen and your pencil and write down these things. I will follow Dividend Passport Bro on YouTube. Okay. And that's all you need to do. Once you follow this channel, right, you're going to learn so much. Even in the comments, guys, we have great people that watch, support this channel, that are always commenting on what they're doing with their portfolio. And soon, right, and soon we're going to be bringing those guys on live when we do our Sunday Talk live, right? That's coming. We'll have them coming on board and talk about their portfolio to motivate you guys. And we're going to try to bring one person every week and then maybe bring some other people on the live just to have a conversation, right? To see what they would do or they won't do to boost their portfolio. Now, we want positivity. We don't want no negativity. As always, if you got negativity for me or this channel, you don't need to be here. Go somewhere else. Okay? I mean, the video's on the internet, so if you want to take the video and make other content against me, that's fine. But you don't need to be here to tell people, oh, this is what you're doing. We don't give a two crap about that. So you want to do that? Do that on your own time, your own space. Leave us the hell alone. Okay, guys? All right, let's get down to business. Guys, oh, one more thing. Remember, I keep forgetting this, right? Usually I bring this in at the end of the video. Remember, right? Let me click on it. Remember to join the Discord. The link is in the description below. Join the Discord, guys, okay? As we built the Discord, okay, to grow this channel, join the Discord, talk to your colleagues in the Discord. I said colleagues, right? Like it's a job. It's a community. Talk to your friends in the community, okay? Talk to them. Ask questions, okay? So let's get that thing started. Let's keep it going, okay? We are building a community, and this community is getting stronger and stronger, okay? We're going to build the YouTube first, and then we're going to build the Discord second. I guess that's how it's going to go because that's the way it seems to be going right now. Anyway, guys, let's get into the portfolio, okay? Because the portfolio, well, the market is closed today, all right? Today is the 17th of February. In 3 days, it's going to make it 5 years since I've been investing in Dividend. And I started investing Dividend on M1 platform. That's part of the reason I keep this platform. But what I realized that even if I close my account, even if I remove funding from this account, right, the account will still be there, but I won't be able to buy anything or sell anything, and they won't be charging me a platform fee. Okay, but I'll still be able to log in to the data that I have there. So I'm thinking that's what I'm going to do. At some point, I'm going to close this account, take this $500 some in here, and transfer it to Charlie Schwab, okay? Because I'm growing that account next to be able to pay my bills and stuff like that. I'm thinking, when I say I grow this account next to pay my bills, guys, keep in mind, right? This one is going to be mostly for my bills outside the U.S., right? But since I'm in the U.S., I still live in the U.S. I just need to get that thing to about maybe 5 or 10K 5 or 10K, maybe 10K. 10K should be more than enough. I think by the time I get to 100 grand, I should be around 10K. And that should be more than enough to sustain me in the US and outside the US. Now, if I start getting my Lambo and all them other stuff and all them expensive cars that I can't even pronounce the name, then I might need to, up that budget. But I mean, I got other portfolio that generating income, so I mean, it's not a problem. Okay, but guys, we know the market is close today. I just wanted to show you guys the portfolio and see what's going on. No change there. But where we got going on over here is the crypto market. Um, it doesn't close, right? Crypto market is always open. So if you invest in crypto, now I know some people day trade crypto. They got sites out there that allow you to do that. More power to you. I don't see how I don't have that level of being seen. I mean, I think it's too stressful. I invest in crypto, but I invest it as a buy and hold investor. I don't buy crypto to sell every day or stuff like that. So if that's what you do, more power to you. As you can see, Bitcoin is down today 1.79%. Ethereum is up 1.2%, right? I started to watch a video yesterday. Somebody made the comment that XRP is going to go to $100 or something, he said. But I mean, look at the market cap, right? They're ranked 24. They got $4 billion in market cap. They're ranked in volume, 24 hours volume. Sorry, they're ranked number 3. And look at the volume, $4 billion in 24 hours. That is crazy. That's not even the market cap. This is what they did in 24 hours. 4 billion. The market cap is $152.63 billion. That is ridiculous. SRP is not going nowhere. SRP ranked number 3 right now. That is crazy. Can you believe that? They're right behind Ethereum. Right? That is freaking crazy, guys. That's why I tell you to use this bubble, because it makes things so much easier to see, right? Oof, look at Ethereum market cap, right? 326 billion. With a B, guys, with a B. And this guy's is $1.89 trillion. Guys, this stuff is not going nowhere, okay? No matter what people tell you, some of these things are not going nowhere. They're not like these crypto.com today and gone tomorrow. So be careful where you invest your money in, because if you don't, you're going to lose your money. And nobody can do nothing about it, because those things comes and goes. Okay, guys? So into my portfolio here, you see all the funds settle, right? And when the market open tomorrow, I'm thinking what I'm going to be buying. I really want to buy some more what do you call it, Misty. But what I'm gonna do, right? Because we're trying to grow the portfolio. What I'm gonna do is 300 and something dollars I have. I think I'm gonna split that up. Now, I know I say one thing, and then when the market open, I do something completely different. It just depends how I feel, okay, about what's going on with my portfolio that day. But what I'm thinking about doing is when the market open tomorrow, I'm gonna buy some Tesla. Or I can wait for Tesla to see what happened to Tesla by Wednesday. Because once I buy by Wednesday, I'm still be good. So Wednesday, I might get some Tesla. Like, see, I only got 10 share of Tesla. I got 10 share of Ybit and let me see what my SQ and Y. So I got 5 share of that. So what I'm gonna do is see if I can split that money between these guys here, right? And try to grow that. Now, I know I made a statement that I might be cutting down instead of having 3 positions in for each week. I might be cutting those down to 2 across the board. But I'm gonna see. I'm gonna maybe go a few weeks and see how things go and make that decision. I might not do that, but I know AIYY is on the chopping board right now for me. But we're gonna see what happens. But I'm gonna try to buy some of that, right? And then maybe depending on the prices, right? I mean, you can see the prices is there right here, $12. Where is the other one? Ybit, $12. Both of these guys have $12 each, right? So I can buy pretty much evenly the same amount of positions between those. And then SN, SNOY is $20. So it's a little bit more expensive, right? So like I said, I might not buy the same amount of numbers wise, but I might spend the same amount in dollars wise, right? And then whatever money is left over for the week, right? I'm gonna put it into Palantir, even though Palantir don't pay until the next week, but I'm gonna put that into Palantir. You can see my cost is $65, $63, sorry, for Palantir, and then right now value at $91.94. So the goal is to kind of grow these guys kind of around the same, but I want to put more money into Palantir because even though it's more expensive, but I'm not gonna get carried away and do like I did with Misty in my Robinhood portfolio, just trying to get to 1,000 shares. I'm gonna try to balance things out. I gotta try to keep these numbers close. Still a few more things that I need to add to the portfolio, right? I got $1,000. Actually, I transferred 4 grand from my Fidelity account, right, into my personal account. I thought it was going to settle today, but it haven't settled, maybe because of the holiday. So maybe tomorrow it's going to settle. Once that's settled, I'm going to move 2 grand, one going into this account, and then the other going into my daughter's Fidelity, into her Robinhood. She got her own Robinhood account. So we're trying to build her spending money account, right? So that's going into that account. And the goal, I mean, she's in university. The goal is to try to get that to about $250, $500 a week. So that's about $1,000 a month for her spending money. So I think by the time we get that thing to about $12,000, $13,000, we should have enough to cover her spending money account. Maybe that will motivate her to pay more attention to her portfolio. Because if I don't ask her about her portfolio, she don't pay no attention to it. Okay, guys. So that's what I'm gonna do coming next week. Now, I mean, like I said, we still on our way, right? By the time we get to about 10 grand, we still got about. I throw another 1,000 in here with $500 away. So that's kind of close, right? And then when we get paid next week, I mean, this Friday, I have no idea how much money we're going to receive across the board. But when we get paid, I can say, okay, well, I'm going to move some more funds into this amount, into this portfolio. Maybe throw some money into Robinhood from Fidelity. I'm trying to put more money into Fidelity now. I mean, into Robinhood. Okay. So now another thing I was gonna do, right? So you remember, guys, when I show you guys this, I made the change to my portfolio to only allow the $64,000 in margin, right? I set a limit, right? So let me show you guys. If you forgot, I set a limit. So I set a limit where it removed the limit. So this is what I have available. I put in the limit for 64,000. Remove limit. No, I don't want to remove the limit. Let me go back. So it didn't take the limit out, right? I set a limit for 64,000, and right now my margins I'm using is 62,000. So let's say if I get another margin call, right? And if it deplete this amount, right, then I'll have to add more money. But come Friday, we get to pay again. So I think this is. I told you guys I was going to try to see if it works. This is the this is the best way. This is the best way to pay back the margins, right? So if when we get paid on Friday, that's gonna it's gonna increase my margin again, right? They're gonna give me more money to invest, but that's gonna cut down this amount of margin, so I can go in there and change it from 64,000, maybe like 60,000, depending on how much money comes in. and that would start to pay down the margin. Now, right? If and then that would decrease the cash that I have also, because the cash that I have, whenever I change the amount, let's say we get 4,000 coming here, and I change this amount, right? The margin will be paid down a little bit because it's not going to go more than that, right? It's going to pay down the margin maybe by 2,000, 3,000, or 4,000, whatever it is. This number is going to continue to go down, right? I'm still going to have some buying power. It's going to adjust as I adjust the amount. This is my thought process. And this is one way to pay the margin faster. So let's say I decide I'm not going to spend no more money. I'm not going to buy nothing for the next 3 months. So the next 3 months, estimate I'm getting anywhere from $7,000 to $10,000 a month in this account. So in 3 months, if I don't buy anything else, which is impossible, it's kind of hard for me not to do, right? If I don't buy nothing else, I'm gonna pay my margin down by 30 grand or 25,000, whatever it is. I'm gonna pay my margin down by almost half. Not almost half, it's 60,000, but you guys get the picture. I'm gonna pay my margin down. So if I go 6 months, then I can pay my margin off in 6 months if I don't buy anything else, and just and keep adjusting the number, right? I keep adjusting this borrow amount, right? That's going to continue to bring down my margins. And when it gets to the point where my margins, let's say I don't have no more margins, right? Let me show you guys what I'm talking about. For those that are like, what the hell is Edwin talking about? What's this margin stuff, right? So if I do this for 6 months completely, 6 months consistently, I won't have no margin if I'm dumping $7,000 to $8,000 into my margins, right? So by the time we hit 6 months, this thing gonna be almost gone. You see right here, this is my margin amount, 62,000, right there, right? Now, if I turn off that setting, right? If I turn the limit off, of course, they're giving me another $12,000 in margin amount. So if you add 12,000 to this, that's $74,000 right there. So I'm gonna have more buying power to buy more stuff, which in turn will increase the money that I have coming in. But since this account, like I said, this account was purposefully set up for my daughter's tuition and her sister after her, right, to continue to grow this and balance this account out properly, her tuition is $24,000 a year. His portfolio is generating over 100 grand a year. I only need 24 of that for the year. So it makes sense, right? Now that she's getting an extra 5 grand, I don't know if it's for per semester. I think it's a per semester. So maybe next semester they're gonna give her another 5 grand. So if they're giving her 5 grand, that's 10 grand a year. Now I only got to come up with $12,000 for the year to pay her tuition for now, and then reinvesting the other 10,000. So by the time she get out of school, instead of her having $100,000 in debt, she can only have maybe $50,000 in debt, which we can pay it off in installments. We can pay that off in a year time, because of course I need more money to be reinvesting while she go do her master's or decide what the hell she's gonna do to get her law degree. So guys, this is the plan. This is what I've been telling you guys for the jump from jump, right? Now, as you can see, I got 54K there, right? That number is going the other way, and I got 4,000 there. So that's $58,000. And I'm waiting for this thing to go up. Whenever it goes up, I'm going to sell it, right? Because some of the money I have in there right there is margin funds, because I did buy some crypto on margins, which was kind of dumb, but I did it anyway. But when I sell that sucker, whatever I owe for margins, going to go back to margins, and that's going to bring my margin down even more, guys. And the good part about it, let's say we get a set off or something where we get a good thing on the market, right? I can turn that back on and use all that money because it's still there. I only just set a limit to where I can borrow, right? I can use all that money that is building, because every time I pay this down, right, what I can borrow is getting bigger and bigger and bigger. So at some point, right? Let's say I pay this down to 100 grand, right? I paid down $120,000. Margin's gone. Now I got $120 of my own money. They're gonna say, you know what? He got $120,000. Let's give him another 120 or 240 or whatever. As I buy more stuff with that money, the income is going up like crazy, right? The income is going to shoot up, and the overall portfolio, right? The three portfolio, soon to be three portfolio, is going to shoot up like crazy. And that's what we need, right? Because the income determines what we do. And the more income we get, we can invest into something else, right? Like I tell you guys, I'm planning next year, if not this year, all of these accounts going to be business accounts. Right now, they're in my personal name. All of these accounts are going to be a business account owned by a trust, right? That I'm going to be managing that trust. Talk to your tax advisor, talk to the professional. I'm just giving you an idea. I'm going to be the guy who managed the trust. I'm going to be, that's to say, own everything but own nothing, right? I'm going to be managing the trust and taking care of everything else. So when shit goes down, who they gonna account for? They got for me. I ain't got. I don't own nothing. Like just like the professional football players, right? That put everything in the mom's name, and then when the wife decide they're gonna file for divorce, they don't get shit because the guy already have everything in his mother's name, and they think, oh, well, yeah, we're gonna get everything. Nah, it don't work like that, buddy. So that's the similar idea, guys. You protecting your asset from those measly people who are gonna come and try to take your stuff away from you. That's all it is. So whatever you can do to protect what you work hard for. Guys, it took me 50 years to become a millionaire. You think I'm going to get there and I'm just let somebody come and take my stuff? Just like that? After working for 50 plus years to get to this point? That is crazy. After losing everything, right? And starting from scratch again? Then I'm going to let somebody who did nothing come into my life, right? And then get half of my shit. Boy, that ain't gonna happen. Please. That's not gonna happen. I'll be single for the rest of my life. There you go. He said, yep. All right, guys. So back to this other portfolio. This is the not the Robinhood. This is mine, Charles Schwab portfolio, right? As you see. Now, a lot of stuff, I sold a lot of stuff in here. You see, we got 1, 2, 3, 4, 5, 6. Let me see. What's that? 1, 2, 3, 7, 8, 9, 10, 11, 12, 13, 14, 19, 30, 32, 42, what's that? 57, 59. Oh shit, and this one got 42 in there. So that give us 61 positions. I mean, 101 positions. If that am I right? I forgot what the last number I said was, but we got 100 and something positions left. It's on that count right here. I might messed up somewhere between that because I moved the thing and it screwed me up. But this is all the positions I have in my Fidelity account. So that's about 100 and something positions, right? If this thing is accurate. So guys, let's go over here. All right. So as you can see, this is all of the full portfolio, right? In here, soon to be 3 portfolio. This one will be going away, and that $500+ is going to be going in here. So plus that $1,000 I'm going to throw in there. Sometime this month, next month, we're going to have 10 grand in this portfolio, and hopefully that 10,000 will be bringing us close to $1,000 a month. Okay, if I put a little bit of money into Palantir, I believe Palantir will get us across that threshold to $1,000 a month with $10,000. Now that's sick. That's a lot of money. But neither here nor there. Now, if we go in here into Fidelity at 380, we're gonna soon be at 400, and this is estimated, guys, which is 30 grand a month. That's estimated. right? I don't even want to look at dividend M1. I don't even look at M1. Now we're still here at 102. Now we haven't bought anything new other than when we bought Misty the last time in the portfolio. So we're gonna see. I have money sitting there. I'm tempted. I'm tempted to buy, but I'm gonna try to hold on. Maybe I'll wait till the week for Palantir and then spend that. Maybe by the time we have like 20 grand or something that I can spend on margins, and maybe I can take that 20 either. I'll wait another week or 2 more weeks and then throw all that back into Misty to bring down my costs again because Misty is king, right? And at that point, if Misty, let's say if Misty dropped to $20, right? 20 plus $1,000 will give me over 1,000 shares of Misty, right? I bought 1,000 shares of Misty after, right, the declaration day, I believe, um, and I couldn't, you know, I couldn't collect that money because it was after the fact. After Wednesday was Thursday. So if I wait until Misty come back around and just accumulate more money plus margins, right? That should be close to maybe $30,000. And if Misty drop in price, I'm not getting rid of Misty. I'm just gonna buy more Misty. So if I buy $30 more thousand worth of Misty at 20 something dollars, let's say if it keep the same price or it go up to 20 something dollars, 27, 28, 29, I'm still gonna buy it because my cost average is $39. So if I spend another 20 something $1,000 to buy Misty, that's something pretty. And I'm only talking in this portfolio, guys. So let me go back. Where's my Misty? My Misty. See, I got 1,500 right now, 570. Um, and my average cost is $39. The value is $40,000, right? And I'm still down this much. So that's why I'm saying if I take $30-some thousand, right, buy Misty at whatever market price is, next week, right? So Misty is at $25, 25.47. That was Misty price is, right? 25.47. So come tomorrow, I don't buy nothing else. I wait for another 3 weeks, right? Or 4 weeks, however long it takes to get back to Misty, and continue to accumulate funds. Right? Whether it goes down or not, it goes up or down, I'm not worried about that. But right now, I have 1,500 shares of Misty that's valued at $40,000. So if I take some $1,000 to buy Misty, right? 37, 38, even 40. If I say, okay, I'm going to throw little bit more money in from another portfolio plus the margins to get it to 40 grand, right? And buy the same identical amount of shares, right? Of Misty, I pay 60 something $1,000 for, right? You see the other 40 plus 32, that's 62,000. I can buy the same identical amount of shares that I paid $62,000 for 40,000, and that's gonna drop my average cost down big time. Okay, that's gonna drop my average cost down. I don't know by how much, but it's gonna be under 30 probably. I don't know. I'm just guessing, right? It's gonna be under 30 probably. That's gonna drop this amount too. That's gonna change this amount, right? From that negative 22, it should drop maybe 5,000 or so, maybe more. I don't know, but still, I will be having 3,000 now, 3,000 plus in Misty. And well, if Misty pays right $2, that's $6,000, right? If they paid $3, oof, You get what I'm talking about? So we're gonna be making more money, and the goal is to make more money. I think at some point, right, when I accumulate about 5,000 shares of Misty in this portfolio, I think that would be where I say, okay, I'm good, and depending on my cost average also, right? Depending on my cost average also. All right, let me get back over here. So guys, as you can see, my portfolio overall, I say is doing good. Some people might look at me like, this guy is completely nuts, right? What the hell is he doing? Why is he doing that? Yeah, I'm nuts. But I have confidence in what I'm doing, right? Because I'm not only investing in high yield, even though that's what we talked about. Because like I said, dividend investing is boring. It's not fun. We make this interesting by showing the income that's coming in every week, right? That make it interesting because I can say, yes, I made $12,000 last week. The week before that, I made almost 8,000. This week, I made 7 or I made 6. Yes, that's interesting. That bring people in to invest. But overall, it is boring. You just set it and wait for the money to come in. That's some people be like, oh, I don't want to do that. I want to do something every day. Well, that's fine. Then go day trade. But if you want to have a stress-free life, well, investing in high yield is a little stressful. So you got to be able to take that away from that, to be able to deal with that. But you can be like, you know what, 4 grand, 5 grand a week, that's good. I can do that, and you can, you know, balance your portfolio to where it's generating similar amount based on the income, right? That's coming in. It's kind of difficult because these things pay differently every week. Okay, guys. Um, so the overall income, I was there and I switch off. Let's go back. The overall income had went down, right? And now it's back up to 33,000. It had went up a little bit and it went back down. So this thing, something I'd be doing its own calculation. But the estimate right now is 33. Now that number can change because this week, right? If Tesla, I might have some crush or I sold, I don't know. I need to check my other portfolio. Not AIYY, YBIT, SNOY. I might have added something else. I don't remember now. I need to go back and check. But that's what I have with Tesla. Um, these guys pay better than what they paid last week. Then their income should remain the same or go up. If they pay less, then the income, of course, is going to drop. But what we do is we take what we get, we either reinvest, right, or pay down margins. Right now, the goal of this year is to get to 60 grand. And of course, it is frustrating when you're getting less in return. But guys, also, I'm not just taking the money and sending it and doing whatever. The money I'm taking, I'm reinvesting it into my core positions that are lower yield positions, right? So that's why the value of my portfolio, especially my Fidelity portfolio, that's why the value of my Fidelity portfolio is a lot lower. As far as not value, but the income is a lot lower because I have a lot of positions that are not extreme high yield. I got a lot of positions that pay less than 9, 10%, 5%, 4%, 3%. I have a lot of positions in my portfolio like that, of course. So that would decrease the amount of income that's coming in. But the good thing about it, right, on a lot of those red days, right, when my portfolio should be down 20, 30 grand, it was only down 10 or $15,000 or 10,000 or 8,000 because of the way my portfolio is balanced. And I'm happy for that. That's what comes with all doing this stuff for 4+ years and learning and trying to figure out what works best for me. Guys, I keep telling you guys, this is not financial advice, okay? I'm here to motivate you guys to invest in your future, right? To learn. This stuff is not hard. Some of you guys are engineers, some of you guys are doctors, some of you guys are lawyers, and you do a lot of reading. So if you can read, do basic reading, man, you good. You shouldn't have any problem doing this stuff, okay? And I mean, there's a lot of information out on the interweb, and I provide a lot of information on this website, on this on this channel also. So there's a lot of stuff here that I can help you guys. And I'm just a click away, of email away, and I haven't checked my email in a week or so. I think it's been a minute. since I checked my email, I said I was going to do it, but sometimes I get caught up and I haven't had the chance to do so. So if you send me an email and I haven't responded, you know what? I'm going to check the email as soon as I get off making this video. I'm going to pull up my email and check it real quick to make sure I'm not missing anything. Okay, guys? Um, Now, let's go to my favorite thing. Now you can see the other thing say 42,000, this one say 33. It's a big difference, right? But every month is the average. And then that average is going to change, right? Once this thing update for this month, it's going to adjust the average for the rest of the month. Um, you know, and based on what we receive, it adjusted the average based on that. And then the week as the week comes, it's going to adjust the average for next month. Now, once the dividends start to come in for next month, as you guys saw, it's going to adjust it back. I just started paying attention to this thing and how it works. The best tab on this right here is the future value. Now, as you guys can see, right, we have 489 and we already hit 10 mil in 10 years. So in 10 years, if I'm continuing to invest consistently like I'm doing now, with this portfolio should be generating $6 million a year. Now, this is, like I said, this is average. This is estimated, right? But if this does not motivate you to get up your ass, right, and go set up your account and throw $100 in there and start investing and start collecting those little $10, $5 coming in every month for doing nothing, that is enough to pay your cable bill or light bill or whatever bill, then you don't need to be watching this channel. Okay, guys? You don't need to be watching this channel because we're here to motivate you guys. Okay? Now, by the end of this year, right, the income, this is what this thing is saying, the estimated income by the end of the year should be about 500,000, and the portfolio should be valued at $1 million, right? Now, this was my other goal, to have $1 million in liquid in the market. So, and I thought I was going to do that 2 years from now, but as you can see, of course, this is estimated. I'm going to have a value of $1 million portfolio in my Fidelity, my Charles Schwab, guys. And this right here does not include my Roth. Okay, this money, my Roth is not included in there. My 401k from work is not included in this. Okay, I don't even add it in here because I cannot touch that money until I'm 59 and a half. So why would I want to add it in here? Now it is added into my overall net worth, right? Because the net worth is something that accumulates everything that I own minus what I owe. So that money is added into that. So when we get to $2 million in net worth, I will bring that tool back out here. I told you guys it's called Empower, right? They changed the name. It's called Empower now, and the name is in the freaking description. So go to the description, put your stuff in there, right? Link it to your account. If you can't link to your account, manually do it. You can add it in there manually if you don't want to link it to your account. It's more work, but you can link it to your account. They just pull the information. They're not accessing your bank account. They're not taking money out of your account. They're not selling your information to nobody. If anything, they're trying to get you to get them to use them to invest for you. And that's the catch. They're going to call you once a year, especially when my account hit $1 million. I was getting called every day from them, right? Until I talked to somebody, I say, you know what, I'm good. I got somebody else managing my account. Even though I manage my own account, but I had to tell them that for them to leave me alone. Because once I told them the first time, yeah, I manage my own account, they're like, okay. And then in 3 months, they'll call me back. Another 3 months, they'll call me back. But once I told them, look, I got somebody else managing my account right now, and I'm happy with them, I haven't got a single call from them. Okay? But that tool is great because it helps you, it keeps you aware of what is coming into your account, what is going out of your account, right? It do a good job. It's not perfect, but it does a good job. And the main thing is it tracks your value, right? You know how they say, oh, this billionaire worth 200 billion. How do you think they track the billion? Somebody got to put that into a system that tracks that for him, right? Now, you're not a billionaire. You're a hundredaire. Oh, guys, that should be funny. If you don't laugh at that, you're going to hell. But you're a hundredaire, right? I was a thousandaire for many years. Now I got one. Okay, so now I'm a millionaire. But I mean, it doesn't change. It doesn't change the way you feel. I still feel the same. I still sleep good, right? Just like I was when I was a thousandaire. So maybe when I have multiple millions, maybe that'll help me sleep good. I don't think so. Because the more money you have, the more you try to preserve it, and the easier it is to make more money. Guys, okay, I know I'm yapping too much, but check out Empower, guys, okay? Because as you can see, I thought it was going to be over here by then, but over here I already have multiple. And of course, as this grow, guess what? We grow in the real estate also. So every time this grow a million or 2 million, the real estate should grow about a million, right? Or two or three. Because the thing about it, it take a little bit of money to buy a 20 million, 30 million dollar property, right? It takes a little bit more money. But when they can see my asset, so it's easier to buy that. And when you buy that kind of property, right? Can you imagine me, little old me, owning a 10 million, 20 million dollar real estate, multi-million dollar property? But that's possible, right? That's possible because right now we planting the seed here. So as we get that money, we show into the bank. Look what I got. I got a big pile here coming in every month. I ain't got to do nothing. It's making 500, 600,000 a month. The bank was like, oh, really? Well, let's give him more money. Let's give him more money. Right? And then if they feel like, well, you got too much, you need to pay this amount of money down on your credit cards for us to give you more money. You'd be like, for sure, I'll do that. I'll pay 50,000 on that credit card, pay the balance off. If that'll make you guys happy, then they'll be like, okay, we're going to increase your limit to 100,000. That's how they do. They do that all the time, guys. And you'd be surprised. The more money you have, the less money you spend on things that poor people pay for because people give you stuff. But this is not the video. Guys, remember to invest in your future because nobody else is going to do it to you. Do it for you. The market is close today, guys. We are on our way to 3,000 subscribers. Thanks again to all the subscribers, guys. I hope today's video helped motivate you, right? As I share my portfolio with you guys every single day. Now, at some point, right, like I keep telling y'all, I'm trying to bring other people onto this channel, right, that will have one big channel. Maybe at some point I'll need to change the name to something else, but we're going to have other people on this channel that will be coming and giving you guys insight. Not just me. This is not about me. This is about us. I started this channel, right, to give back, okay? Now, on a monthly basis, since we got monetized, like I said, there's some months we made $100, some months we made $50, some months we made $60. But the money just ain't there, right? They haven't sent me a money yet because I haven't added my bank account for them to send me money. So that tells you I don't need the money, right? At some point, if it gets to where it's enough, I'll be like, okay, now I got 4 or 5 grand. Let me take that and throw it into an investment account and make some money out of it. But for now, that don't do it. It's not going to do anything for me. Okay, guys, I didn't start this channel to make money. I started this channel to spread the word that anybody can invest. Anybody can be financially free. Anybody can do it in 10 years or less if you put in the work, right? I've been doing this for 5 years. And this is where I'm at in 5 years. Okay, there's no magic pill, there's no nothing. 5 years, this is where I'm at. I'm already a millionaire. Now, all my millions did not come from the stock market, not yet, right? But as you can see, within a year, right? Within a year, I will become a stock market millionaire also, right? Not my combined real estate and all. No, I'll just have millions in the stock market. And that's going to continue to grow. Next year will be 2, and the year after that 4, and the year after that 6. And in 10 years, we'll be making about $6 million a year. $6 million in 10 years. That's what it is now. But by 10 years, that's going to double. That's going to be more. You see what I'm saying, guys? That's going to be more. So with that said, I'm gonna end the video here. Okay. I appreciate you guys. I say this over and over. I love you guys. Okay. And I'm gonna leave that alone. I love you guys. Have a great day. We're gonna do this again tomorrow when the market open. Hopefully tomorrow the market continue to go up. But if it don't, it is what it is. We're gonna hang around and survive it and continue to make money, right? Because we got a new president in office. The best thing you can do this term of this president is to make enough money because he's going to make it easy for the rich to get richer. And guess what? With my 1 million in the next 4 years, I should have about 20 of those things. Even though that thing say in 10 years I should have 20, right? That thing said 10 years I should have 20, right? Right? What is it? 10 years I should have 20 of these. In the next 4 years, we should have more than 20 of those sitting there, right? And I'm not just talking about in this portfolio. I mean, overall, my net worth should be around 20 million in 4 years, right? Because that's what I see. That's what I see, and it only takes a little bit more. It takes a little bit more seasoning, a little bit more sprinkle to get us to where we need to get to. Okay, guys, I've done enough. Have a good one. Love you guys. Peace out.